Hi, this is Randy Finney with the right side of the chart, and today is Wednesday, October 19th, 2016. Wanted to go through the charts of gold, silver, and just a few of the leading mining stocks, and we'll look at GDX, of course, and give you my thoughts on the sector. I've had quite a few. I'd probably say more than any other sector, asset class, even including the broad markets. Probably field more questions on the mining stocks and just about anything at really at any point in time, but especially in the last so far in 2016 with the strong rally we've had. So I've made it clear both on the front page and in the trading room, after covering the shorts recently, which was right around the lows we got out of the GDX mining, individual mining stocks and all that. I haven't had a desire to engage the sector long or short, so I've left the trade ideas off the site. I've said that my read on the charts isn't very strong, but I'll do an update. I get asked a lot for updates, so let's just take a look at the charts. We'll go through there, and what I'm going to get to at the end here, I'll look at some of the miners. We had a decent rally. I know quite a few in the trading room caught that rally recently on the upside. Congratulations. Maybe time to book profits on that. Although, I'm going to make a case we're at resistance on a lot of the mining stocks. And, resistance is resistance until unless broken out. So if you take it out, then that's bullish, and that may be the case. But big picture here, we'll just start with a quick overview of gold. There's the bull market in gold leading up to the highs. You can see as of here, here's the line at 2016 where the crosshairs are. So we've had a heck of a rally this year, but, with the strength of the rally, it seems to me that the vast majority are just, adamant that gold and the mining stocks are in a new secular bull market. Maybe not. This is more of a what I would call a secular bull market, a cyclical bull market so far, possibly within a secular bear market. We just don't know. But if you look at this chart, a downtrend is defined by a stock or index or security making a series of lower lows and lower lows and lower highs. And, that's what's been going on so far. Now, I made the case, the bullish case, even leading into the lows. We had the divergences, major support, everything was hit. And so, the case has been made certainly for the rally in gold. But when you look at this long-term chart, again, this is a 10-year weekly chart. Right now the trend is still bearish, and until and unless gold gets up here, there's a mountain of supply, and it may do so. We may turn around. This correction pullback may very well be over. I'm very open to that possibility, and I'm also open to the possibility of more downside. But I just take a look at the big picture, and you just can't say definitively that gold is headed to new highs at this point. In other words, you can't say that this rally off the 2000 was really December when gold bottomed, the miners bottomed a little later. You just can't say with certainty that that isn't anything more than a bear market rally within a larger, bear market counter trend rally within a larger bear market. So that's gold. We'll look at silver real quick, then we'll drill down to the daily charts and then get into the individual miners. The setups were nice. These were big bullish falling wedges. The breakouts everything was textbooked so far to the technicals. Silver, gold, you can see a lot of resistance when you go back on this chart. Again, we're on a weekly chart of SLV, the silver ETF. You can see all the reactions back here, and so what you had is silver extremely overbought, or very overbought, not extreme. This was an extreme overbought reading, so was this one. Right into resistance. So, the recent short trades we had, of course, some earlier in the year that failed. I'm not going to say that we get them all right, but the recent one to me was just a no-brainer. The miners were screaming short. Here's GDX. There's a weekly chart. Downtrend lines. GDX has been very powerful, as it always is. If you can get the call, if you can pick a rally in gold or silver, or a drop, a correction, trading the miners, I always say, is simply a leveraged play on gold or silver. If gold goes up X, GDX is going to go up X times 2 or 3 or more, and vice versa. It cuts both ways. So, always trade the miners. I like to trade the miners versus the individual metals because of that reason. There's a lot more profit potential percentage-wise. But you know, it cuts both ways, of course, so you need a little bit larger stops. And there's GDX. Anyways, GDX ran into resistance. We'll drill down now to the daily charts here. Daily charts, you know, this was that last rising wedge. So we were able to short it up here, ride down to this final target area and get out. What you can see here so far, the miners have held that gap support area. There was a little bit of an overshoot. I'm not crazy. This is one of the things that I said I'd like to see. I would love to see or have seen bullish divergence. And at one point we had potential bullish divergence setting up. You can see it there, but it was burned through. So that's a, for lack of a better word, an icky looking MACD. That's not what I like to see. For a you know, bottoming action on the daily charts. There is bullish divergence in place on the R side though, so like I said, the case is certainly there that the worst may be over and these guys are headed up and may ultimately go on to take out new highs, or you know, even come up and challenge those old highs. There's still a lot of work to be done. These lines here, I'll just color them real quickly. These are some key levels you have to watch, key resistance levels. Right there, let's color that purple as well. So that's what I call a mountain of resistance or overhead supply. All these trades that occurred there, well defined. And you know, so if we break above there, then especially break above that purple line around 28.66, that opens the door for a move to challenge the highs, and then we'll probably just continue on up. So the longer term case may, you know, is certainly the potential is still there. Just a little too early to say. Let's just jump back now to the daily charts of gold and silver, and then we'll go down to the miners. So here's gold on the daily chart. Like I said, we don't have any bullish divergence on the MACD or the RSI on the daily time frame. We have a potential bullish crossover, but sometimes those crossovers fail. But you watch that, you know, you see these two lines cross, that's bullish. It was oversold, typically oversold when you look at oversold readings on gold. Proves to be a good buying opportunity, especially if this is a new, you know, bull market with a lot more legs. Then oversold is usually a gift when you get it on the RSI. In a bear market, oversold can often become more oversold or stay oversold for an extended period of time. But in a bull trend, prices, once they tag oversold, they rarely stay there long, and that often proves to be a very good entry point. So, you know, the case can be made both ways, and my confidence near term isn't so, it's not very strong right now. So remember, in trading, at least my rule, you know, less is more. You don't always have to be in the market, and I find that more often when I'm very patient and I hold off and try not to force trades and jump back in a security, I do better. So I don't mind missing, you know, a bounce. I don't mind missing this bounce so far in the metals and the mining stocks. But here's a look at silver on the daily chart. Here's an uptrend line. Not the most well defined. You have 1, 2, the minimum 3 reactions. There's a little bit of a reaction there. Broke down. You know, it takes at least 3 reactions in my book to validate a trend line. Any 2 points can be connected at random. So something to watch. Maybe we come back up here. And this also, if there is a little more upside in silver, you can see we had this gap support here. See these 2 lines right here, and we had nice reaction. The bottom of that gap had 1, 2. We kind of smashed through it there. At least 2 reactions. So that level's at 1710. I think that's where that number is. And it comes in right around where that trend line does. So it looks like if silver does continue to rally, we have about another percentage terms, 1.6% or so. And then it runs into some pretty significant resistance. So there may be a little more room left, especially if we get this bullish crossover here. And let's see, 60-minute charts. You guys know I like to go during a major correction or downtrend. I like to see bullish divergence. I'd love to see it on the daily charts to go long, position long for a swing trade. And ideally, one of the things I look for, and I've mentioned this, is at least bullish divergence on the 60-minute chart, and we didn't have that here in silver, nor did we have it in gold. In other words, no divergence at all on this low in silver recently, and now silver's at resistance. So this is point number 1 here. You can see this reaction, couple reactions. There's a gap. If you really zoom in, that line starts there at the top of that gap. That's where prices close. The next day they gap down. We came back, tested the top of the gap, failed. Came back, we're at the top of the gap again, which is resistance. Now, if they take that out, which they recently did in gold, That's pretty bullish, and there's not a lot. Look at the volume price histogram, very thin. So silver could easily run up, and that, let's see if that comes in with that. No, that's much bigger than that other move I talked about on the daily chart. That's about a almost 4.5% gain. And again, this is looking at the 60-minute charts. Always trade with an eye on all the various time frames. 4-hour chart, there's that same uptrend line on the daily chart that I just pointed out, so we're below there. And you actually have a couple more reactions when we look at it here. You have 1, 2, 3, then we smash through it. So that's bearish. In fact, this could be construed or taken as a bearish pennant continuation pattern, and that would be pretty bearish. What I'm talking about here, you have an impulsive move down from this point. That would, oh, wrong line or wrong tool. Let's try this again. You have an impulsive move down, which would be your flagpole, and then should this bearish pennant break out, that the measured target would be you take the distance of the flagpole or the move leading up to that consolidation or the pennant here, and you add it to the top of the pennant pattern right before the pattern breaks down. And just looking at this chart, just eyeballing this as I do this, let's clear those out. That comes in right about, you can see some pretty nice support here. You have reactions there from below, reactions from above. So I'm very much open to the possibility. And as I said recently, I've been leaning towards another thrust down in the metals. The bounce we have so far has been relatively muted. You know, percentage-wise, it might be big. You made great gains if you were trading Nugget, but when you look at the scheme of things, again, the big picture here, that bounce is nothing compared to the move down. It's just a reaction, a bounce off support. So just be aware of that. Don't become married to any one trade. And if you're trading these, again, if you break above that that bearish pennant that I just pointed out on the 4-hour time frame, well, you could foil the pattern, but you could also, the only problem with that, it could morph into a a bearish flag, bear flag pattern. That's what a flag would look like. So, just be careful there. I'm just pointing out levels, things to watch here. All right, let's just look at the miners real quick now, and I'm only going to focus on the 60-minute charts and try to keep this video short. If there's time at the end, maybe I'll go out to the daily charts, but I'll go through these in just only a handful. I'm not going to go through them all. I'll go through them in order of market cap. Therefore, you look at the biggest company, here's Barrick. This is the largest market cap. I'm showing it's about a $19.1 billion company. So if you just look at where the top ones are going, similar to my analysis on the NASDAQ 100 by watching the top 10 components because they make up the bulk of the returns, you're probably going to see the same thing here in the metals. So here's Barrick on a 60-minute time frame. What I'm seeing is I'm seeing a pretty significant resistance level right here, which is the top of that gap. We're right at gap support. You can see the gap I'm referring to over here to the left of the chart, to the left of where we're at now. Let's circle it for you, or I'll highlight it. There's a gap, big gap. Gaps are often, very often, at least on the initial backfill of a gap, you get a reaction. So at the very least, I'm looking for a pullback trade. And right before this video, I'll tell you, I just opened a short on the miners. And I'll see, maybe just a quick pullback trade. We'll see what happens, see how things play out. I could extend it. And the nice thing about it is my stops are not far above, because if we take out all these levels, that'll be bullish. So you also can notice this uptrend line, pretty well defined going back here. So just above the gap, if we take that out, you kind of have a mixed bag. You have a downtrend line right here, which may be taken out, but then you have this uptrend line, which may need to be back tested. So there's a confluence of resistance levels, the gap, the downtrend line, and the uptrend line, all above on Barrick. And it's had a pretty healthy run to get here. And if it takes all those out, and breaks up here, that's obviously bullish. But like I said, I'm not crazy about it. I didn't see 60-minute divergence, positive divergence. And so there's one stock, and I think I can make a very strong case for that stock being up at considerable resistance. Again, a confluence of resistance. All right, Newmont's number 2 as far as market cap goes at 18.2 billion, and we're at the bottom of the gap on this one. It punched through ever so slightly. It's struggling with the bottom of that gap. It is just above it. You can see that line there. And if it takes that out, of course, then you have the top of the gap as next resistance, and pretty significant resistance. You can see all the reactions there. So it's not just a gap, the top of the gap to backfill, but it's also price resistance with numerous tags. In addition to that, just like Barrick, you have a confluence of at least two different resistance levels. You have a downtrend line here on the 60-minute chart, as well as the top of that gap. So limited upside is what I see, and that's where, you know, I'll give my shorts room to, you know, if all of these leading stocks take out those levels with conviction, that means impulsively or in a 60, maybe 120 minute or even a daily close, then I'll cover it. So my downside's relatively limited. GG, Gold Corp, there it is again. You're going to see this. You know, I often talk about this, that certain sectors, the components tend to move in synchronicity more so than other sectors. You know, birds of a feather flock together, and the miners are one of those. So you're going to see these gaps pretty much across the board on a lot of these stocks, you know, from that day. So there we are, struggling with the bottom of the gap resistance with the top of the gap not too far above. I didn't add it. Let me see if how a downtrend line would look here if I put it. Yeah, you could certainly add a downtrend line there, not too far above. So again, the theme is a lot of these charts will be the same. You didn't have any divergence in place down at the bottom. So here's a, you know, what may just be a counter trend bounce into resistance and a bigger downtrend with more to come is the whole theme of this video. So maybe time to reel in some profits if you caught this bounce long, or if you think they're gonna be taken out. Again, the case was made on the daily chart. We could continue to rise. These levels could be taken out. Then all you have to do is raise your stops to protect profits and let the position run, whatever your trading style is. AEM, you can see price, horizontal price resistance right there around, well, right around $50. And, you know, there's that gap, big old gap we're talking about. So just above the $50 resistance level, we have the top of the bottom of the gap at around 51, and then the top of the gap around 52. Some pretty even numbers there. AEM, and maybe we'll look at one more here. SLW, Silver Wheaton, same story. You can see reaction here, reactions here, and that's, so we're at that resistance level, and if we get through there, then we have the gap to test. Bottom of the gap would be the first resistance area if this price resistance is taken out, and then the top of the gap. So some work to be done on SLW. So there's a common theme. These are the top, you know, the big names in the sector. Each and every one is at resistance, and they have, you know, even if they move a little higher, they still have a little more resistance to clear, quite a bit. And being that this is the initial thrust up into that resistance level, at the very least, I favor a pullback. It could go a little higher, and I'm talking it as a whole, in the whole group. Maybe looks like a little cup and handle there if that happens. Maybe puts in a handle here, forms a cup and handle pattern, and then breaks out to the upside. So right now, like I said, I'm just positioning for a pullback. You have support down around here. You can, let's clear these lines out and show you. I'll have to look at the targets. I really haven't set my targets, but I know it would be at least back down to this level. In fact, let me just give you GDX here. Let's look at GDX. So there's GDX. It's taken out this downtrend line. There's that big gap. I probably should have covered GDX to begin with. Here's the gap. You can see it, and as all those stocks had. So we're right just below the bottom of that gap. So there's gap resistance. If it gets into the gap and backfills it, the top of the gap would be your next resistance level. And you know, quite a bit of a run. It took out this 2411 resistance level here. You can see kind of gapped up today and took that out. So a pullback trade would be back down to that level minimum. That's just the minimum target I'd be looking at right there. And although it doesn't look like much, you know, when you trade this, that's better than a 3% drop on GDX. So if you use Nugget or Dust, that's, you know, 9% right there. And of course, if it turns out to be more, if we break down on that 4-hour bearish pennant pattern, you know, you can just trail stops and let that one run, and there's a lot more potential. Okay, guys, hope you found it useful. This has been Randy Finney with Right Side of the Chart. Have a great day.